Caught up with Krishna Kumar of Eastspring Investments earlier in the day in an exclusive conversation and began by asking him about his outlook on the market and earnings. Listen in.
Yeah, it's been a bit volatile and it continues to be a bit volatile. I think the global markets are obviously not very helpful. India, in the scheme of things, is the only bit of an island where we see earnings growth. I have a fear that it's being exaggerated and possibly a bit back-ended. I really hope that the fact that the delivery is more sanguine and possibly real in the second half, because the first quarter obviously has not been a great start. I believe that the global markets could get a little more volatile in the second quarter, but I think the second half should be relatively better.
Why do you think global markets will get volatile in the second quarter? Because, you know, there have been many problem pockets which have cropped up in the last quarter or so, Brexit included. Yet the S&P in the US is trading at all-time highs. Markets seem to be just dismissing any of the problem areas which are cropping up. Is your concern related to what the Fed might do, or why do you think volatility will come back later in the year?
So it's a very awkward market. You know, there are a variety of reasons. I'll probably touch upon a few. The awkward bit is the fixed income guys are looking for capital gains, and the equity guys are actually looking for yields. So it's completely warped. The fact is, there are a number of events which are happening globally. Interest rates are all-time lows, and obviously that's not helping growth. In spite of being so low as they are, you still don't have growth or any signs of any growth. So the obviously alternate asset that you think about is equities and commodities, where you've got to go and invest more monies because you're not making money elsewhere. A couple of other things which are important, I think, is China, where there is rate action which is pending. Chinese rate action will have an impact on commodities, and that's where one needs to kind of keep an eye. The fact that these changes as they happen tend to become more volatile, and less things which are anticipated, start cropping up. And the reality is, we live in a world which is so uncertain and zero growth, as you see. So it will be volatile because things will settle down. People will look out for assets which are cheap. People will go out and look for materials, commodities, whatever be it. And the fact that, you know, at these zero rate environments, even that is not driving consumption. So it's a very awkward kind of a marketplace, and that's what will cause the volatility.
You would say that the calm that we are seeing in global markets is an uneasy kind of calm then?
Yeah, think about it this way. I mean, even globally, I mean, all brokerages are a benchmark. In a bull market, you have volumes which are peaking, topping the previous highs. A classic example is the Indian markets. I mean, the foreign brokerages are running at about 30 to 50% below previous year volume levels. It suggests to you that there is very little participation. And the fact that it is running away or going away wherever it is, the fact that, you know, there is retail money chasing it somewhere in some form or the other. And so that's what is causing this kind of a bit of a turmoil.
Okay, and you can watch that entire exclusive conversation today at 5:30 p.m. and 8:30 p.m. only on CNBC TV 18. But let's drill it